The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York this holiday shortened week, I'm Scarlett Fu.
And I'm Alex Steele. Happy Monday, Scar.
Yeah, happy 4th of July in advance.
And happy first half of the second half of the year.
There you go.
It's so confusing. Let's get a check where on market stand here. So the S&P up by about 0.1%. So not that much to get excited about. The Dow, for example, was up triple digits, but that has changed on the day. The Russell, though, underperforming. Small caps in the spotlight. If the economy slows, if a President Trump comes into power, Morgan Stanley, for example, talking about small caps being a little bit of a risk. We're going to get to that throughout the show. Now, if we're going to look at political risk, two areas to look at, and that's the bond market and the dollar. The dollar moving higher, bond yields moving higher as we kind of digest the political risk within the market, Scar.
All right, well, speaking of that, gaining out a Trump 2.0 victory. Wall Street analysts casting a fresh eye at what another Trump administration might mean: higher tariffs, sticky inflation, and higher bond yields. This following the Supreme Court's ruling today that Trump has some immunity from criminal charges tied to January 6th, combined with momentum from last week's debate.
We're also watching NVIDIA's second half whimper. You got the stock pretty much going nowhere after reports that French antitrust enforcers are preparing to charge the company. Chips trade heavy. Mag 7, though, hitting a record thanks to Microsoft.
And the Roaring Kitty effect. Influencer Keith Gill's disclosure that he has a $245 million stake in Chewy leads to a surge in volume, while GameStop falls to a one-month low after shareholders sued Gill for an alleged pump and dump of the video game retailer's shares.
All right, in the meantime, we got breaking news for you. Christine Lagarde speaking at the ECB Forum on central banking in Central Portugal. Want to bring in Bloomberg's Michael McKee to break down what we are hearing. What are the highlights here, Mike?
Well, Sintra is the ECB's version of Jackson Hole, as it were, and Christine Lagarde is using her opening speech to warn people we aren't in a hurry to raise interest rates. She says that the ECB needs time to assess the inflation, but they are going to remain vigilant because their work is not done. Quote from her speech, it will take time for us to gather sufficient data to be certain that the risks of above-target inflation have passed. The strong labor market means we can take time to gather new information. All of this underpins our determination to be data-dependent and to take our policy decisions meeting by meeting. She says the performance of the European economy remains uncertain. Now, tomorrow we will hear Jay Powell on a panel with Christine Lagarde and the central banker of Brazil. The question is, when do any of these people start moving again on rates? The ECB did it once. Pierre Wunsch, who is the Belgian central banker, telling Bloomberg TV just a short time ago that July is an option for them, but there are obstacles in the way. Their next meeting's July 18th, and then you look to September, October, December. Dates aren't exactly the same as the Fed, but they're pretty close. So we're on about the same timetable for when they could move. Question is, when would they?
So, of course, the Fed has two mandates, right? Full employment and also managing inflation. The ECB looks at only inflation, yet they do kind of consider the labor market a little bit here in terms of kind of staking out what inflation might look like.
Well, their mandate actually says they need to support the economic policies of the Eurozone. And the economic policy of the Eurozone would obviously be not to have unemployment rise a lot. But they are bound only by the inflation mandate. Now, their CPI inflation is basically around 2% because they don't count housing the same way the U.S. does. If the Fed took out housing the way the ECB did, we'd be at their target. And so it pays your money and it takes your choice.
So does that mean that there's no cowboy hats in Sintra, even though it's the Jackson Hole of
I don't think so. This is in
you.
Portugal, so it probably fisherman's hats or
that's definitely tough for Mike.
Like that, yeah.
Real quick, when they say data dependence and data point dependence, what is the distinction between that?
They're looking at the entire range of data that they get instead of saying this is the target or this is what we have to meet or this is the unemployment rate that bothers us or something like that.
All right, good stuff. Michael McKee, thank you so much for breaking it down, the Lagarde headlines coming out of Portugal. We want to continue the conversation on what all this means for markets, global markets. Let's bring in Mimi Duff. She is managing director at GenTrust. Mimi, thank you so much for joining us. You heard us earlier talking about how investors and analysts are trying to assess the risks and, of course, the winners of a Trump administration 2.0. How are you thinking about election risk, whether it's in France or whether it's in the U.S.?
Yeah, so I think some of these recent events that we've just seen has pulled forward some of the volatility that we were expecting to see a little bit later in the year. So I would say right now I think we're bracing for a bit more volatility. We're seeing probably enhanced volatility this week, also because of the holiday week. Just in terms of just general lack of liquidity, we're probably seeing outsized moves.
How much do you attribute the declines in treasuries and the higher yields today to concern about sticky inflation brought on by either candidate winning, because fiscal spending will continue to be something that they have to keep in mind?
I certainly think that's part of it. We also had a stronger consumer confidence, report the other day. There's, some ideas that we could see more JGB intervention. So it's really hard to break things down to one thing, but I think all of those things could be factors.
So, and then to that point, Morgan Stanley had a couple notes out sort of dissecting what it means for the bond market and then for the equity market. And the overwhelming take was higher inflation and weaker growth. So for Matt Hornback on the bond side, he said that's going to be a steeper curve. For Mike Wilson, it means it's going to be struggling for small caps. For example, cyclical areas of the market are going to struggle. Lower quality stocks are going to struggle. Is that a way to think about it? Higher term premium and the cyclicality of stocks will struggle?
Well, I certainly, we agree with the steeper curve philosophy. I mean, the debt path under either administration doesn't look great, as we know. So that, I think, is definitely true. Now, we do think that as we approach higher yields, we expect to see some support. And in addition to that, we think that with rates as restrictive as they are, we are due for an economic slowdown. So we don't want to go too crazy on shying away from bonds in general, but we don't love the back end. We're slightly underweight duration, but we are overweight bonds.
Well, so is it front end then for you?
Yeah, we like front end intermediate. We do think right here we're range bound. So, if we were to back up measurably, we would be more likely to add.
As we get ready for the start of yet another earnings season in this new second half of the year, how are you thinking about corporate profits as the consensus seems to build that the economy is slowing down?
Yeah, I think we also look. I don't think the consensus is that the economy is slowing down. If you look at survey-based measures for how many folks are looking for recession in the next year, they're anywhere from 5 to 25%. That we think is too low, given where rates are, restrictive policy. We've seen the consumer savings drawn down. We know that the housing markets are starting to slow. So if anything, thus far, equity markets have delivered, but we're shying away a little bit more about that optimism in the second half of the year.
So how does that influence how the Fed moves when it comes to a rate cut, the phantom rate cut that we've all been waiting for?
Yeah, so interesting to hear Lagarde's comments, because it's almost like maybe she's taking a page out of Powell's book. I think they're really trying to maintain independence, maintain flexibility, come meeting by meeting. Right now, the market is priced for the first cut in November. The inflation data it's only 1 month, but it has looked a little bit better. Let's watch Friday's payroll report. Let's watch the employment cost index part of that report. But interesting to me, Powell, in the last couple times he's spoken, so let's listen for tomorrow. He's brought up an idea that if they were to also see a material weakening on the employment side, that would also potentially be a reason to cut rates. But I think they're just trying to maintain as much flexibility as they can.
So Mimi, just to wrap it all up for us, when we have November markets pricing in that first rate cut and we have the election and earnings are TBD, is the best course of action just sit somewhere and hang out and wait? Or do you want to be invested, or you got to take profit on winners?
So we're long-term, long only. We have to be invested. You can't time the market. So we're a bit more cautiously positioned right here. We're a little underweight equities. We're a bit overweight bonds, but we do have exposure to diversified portfolios here. We want to stay nimble enough to react to the bigger picture things. But what we've seen in the last week, I think, is just somewhat normal volatility.
All right, Mimi Duff, really appreciate your giving us your outlook here on this first day of the second half of the year. Mimi Duff is managing director over at GenTrust. We did have some headlines come through on Paramount. Paramount Plus is said to be, Paramount is said to be in talks to explore a merger of Paramount Plus with Max. WDBD, Warner Brothers Discovery, is interested in merging Max with Paramount Plus as a joint venture, according to CNBC. We see shares of Paramount pairing some of their losses. Warner Brothers Discovery continues to be lower.
Now, do lots of wrongs make a right? Like, is that like my takeaway here? Like, here are the 17 ways that we can save Paramount and Paramount Plus.
They need to come up with something. So, yeah, this is part of the process of coming up with a solution here after, of course, Sherry Redstone walked away from an offer to merge the business with David Ellison's Skydance Media.
Yeah. As long as Survivor stays on, that's all I care about.
You just want access to your favorite shows,
True.
as do we all. All right, coming up on The Close, a divided Supreme Court issues its ruling in the Trump immunity case. A closer look at the decision and what it could mean for the November election.
Plus, you got the latest on the Justice Department's plans to charge Boeing with criminal fraud. We're going to look at how tough legal choices that Boeing faces now.
And we'll talk with Timothy Fiore, chair of the ISM Manufacturing Business Survey Committee, as the latest data show U.S. factory activity shrinking for a third month. All that and more coming up. This is The Close on Bloomberg.
The political news of the day that did move markets. Supreme Court ruling that Donald Trump has some immunity from criminal charges for trying to reverse the 2020 election results, all but ensuring that a trial won't happen before the November election. We're joined now for more with Wall Street Week host David Westin, who also clerked the Supreme Court judge. What do you think the takeaway is from this when it goes back down to the lower court?
Well, certainly the Supreme Court wants attention. They've been right in the center of attention the entire term.
Don't they usually try not to do that?
Well, not recently, but I mean, what I think basically is a split decision. I mean, it didn't go Donald Trump's way, which is basically he's immune no matter what. They also said that there are some things that you can prosecute him for, but not all things. There are some things he is immune for. And then it sent it back down to the district court. The main thing is how long it's going to take, right? Because he is running for president, and it looks right now like he might have a pretty good chance of it. And if so, that case is not going to go forward.
So when we say that he has some immunity, the idea is that former presidents are shielded from prosecution for some official acts taken while in office. What does that mean?
Well,
that's in the eye of the beholder.
It's pretty complicated. The whole thing, yes, it's the eye of the beholder, but that's the way judges work. They're the beholders, so they like that. But it's three parts. There's unofficial acts for which there's no immunity at all. If it's unofficial, no immunity. They can come after you for whatever. Then there's areas that are official acts, but there are two subcategories. One is the core, the stuff that the Supreme Court, that the Constitution says you get to decide, President, and Congress doesn't say anything about it. And then there are areas where you get to decide, Mr. President, but Congress has a say. In those, then you have a presumption of immunity, but it can be rebutted.
Does this just all signal that everything's going to wind up in courts? Whether we're looking at this, whether we're looking at regulation, whether we're looking at law writing? I mean...
Yes, absolutely. This leads to more litigation rather than less. Although there haven't been that many prosecutions of former presidents, if you think about it. That you have to go back to Aaron Burr, who was vice president, before you get this. But there's a broader issue here, actually. The people get to decide in November. We don't need to have the courts decide for us. If we all decide we don't like what Donald Trump did, we can vote against him. That is another alternative. We don't have to take everything to the courts all the time.
But a lot of stuff that President Trump is involved in does end up in the courts. Yeah. And, of course, his administration appointed a lot of the judges during his term. So,
yeah, although I would point out, Scarlett, if you go back to when there were challenges to the 2020 election, those judges did not stay with him at all. When there were challenges, I mean, if you go right down the line, the Trump-appointed judges did not differ in their opinions from anybody else. The courts stood up pretty tall. So I don't think that's a big issue. The main point, your point, is Donald Trump likes to litigate. I'm not talking about even President Trump, but he's liked to litigate his entire career.
Yeah.
And he's made a career out of stalling, out of taking forever, also not paying his legal bills a lot of times, but of stalling and dragging it out. And he's managed to do that here. And it makes it less likely that we'll ever see a trial in this case.
So having covered politics for Bloomberg, then also being a Supreme Court clerk, and then also being a lawyer for so long, what are your questions now? Like, what's the number one question you have after this came out and we know kind of where it's going from here?
I think the number one question is the question we've had all along. Do the people care? I mean, do people really care? If you go back to when Donald Trump, the candidate, said I could shoot somebody in Fifth Avenue and nobody pay attention. And we all thought that was just ridiculous. And right now, it doesn't appear to be so ridiculous. So, I mean, everybody knows what's going on. We see what's happening. We see what the evidence is. We see what the facts are. The question is, do the American people care? And if they don't care, if they say, I want him to be president anyway, then should we really be stopping that?
Okay, all good points. You would say that this gets kicked down to the lower courts again. How quickly, or does it matter at this point?
Well, it does matter. Because, that election coming in November, and if he becomes president...
But unlikely that's going to happen before the election.
Unlikely, because there are a lot of things to be decided, and there are a lot of different counts in the indictment, and each one of them, the Supreme Court goes through and says, look, is this totally immune? Is it partially immune? What are the things you take into account? And there are going to have to be arguments on that, quite possibly fact-finding. They may have to actually find some facts there, and typically that's going to take some time. I'm not sure they can get that done in time.
So we have some breaking news, and we're going to go to D.C. in just a moment with a reporter who helped break it. But, David, apparently it looks like the Democrats are weighing an early Biden nomination to squash talk of any kind of swap on the ticket. They're looking at July 21st meeting, offering that potential date for the party to tap President Biden. Have we ever seen this before?
No, I don't believe so. I don't remember
right?
that happening. They were going to have the vote before the convention anyway, I think. They were.
Okay, so this had nothing to do
I'm not sure that far in advance of it. Well, I don't know. If they're doing that right now, I mean, it certainly would raise some questions, right? As people are debating whether, in fact, including some Democrats debating whether, in fact, Joe Biden should step aside and free his delegates up. So, but by all accounts, he's doubling down with his family, and he has no intention of going anywhere.
All right, David Westin, fantastic to get your take on all of this, including the latest headline here. David Westin, of course, host of Wall Street Week here on Bloomberg Television. Joining us now from Washington with more on this headline about Democrats weighing an early Biden nomination is Bloomberg's Mario Parker, who wrote this story. So, Mario, tell us what we know and in the context that this news is happening.
Yes, just to David's point, part of this we knew because of what happened in Ohio, law forced Democrats to start considering moving up the date in order to ensure that President Biden would be on the ballot, right? So they changed some of the bylaws in order to meet virtually to do that. What hasn't been reported yet was that July 21st date that they're looking at. Part of what came out of this weekend with a flurry of phone calls between the party and others was whether or not they could look to, or they should look to move some of that nominating date up. Of course, some of this comes as there's calls from within the party for Biden to step aside. So just speaking with sources within the Democratic Party, a lot of them just wanted to stress that Biden is our nominee, that Biden won 99% of the delegates. And in part, while some of this is procedural for the Ohio situation, a lot of this is also can't be glossed over, is in part due to the calls for the president to step aside.
So just to reiterate, Democrats are weighing an early Biden nomination to kind of squash talk of a swap. That date looks to be potentially July 21st. So just to get the logistics clear, this is always what happens before a convention. It's just that the date might be moved up because of what happened in the debate. So that's the key, right? How to address that panic.
Well, the parliamentary rules, right, stated that you have all of these things that you do, these procedures that you do, these different subcommittees that meet ahead of the formal convention. That formal convention, those committees had already started doing some of that work ahead of the formal convention just because of, by virtue of Ohio initially setting an August 7th date for nominees to be on the ballot. What they've also is so in some ways what it is fortuitous for Democrats, right? Democrats had already been looking at maybe a way to try to move up the virtual nominating process because of this August 7th date. This gives them an end now. The July 21st date gives them an end to do that. Again, stressing that Biden is a nominee as the party looks to beat back some of these calls that Biden should step aside.
Yeah, silence the critics, in other words. Mario Parker in Washington, thank you so much. Mario, of course, co-author of the story about Democrats weighing an early Biden nomination to squash squash talk of a possible swap at the top of the ticket. All right, let's move on right now to. Are we doing top calls?
Yeah,
right
we're
now?
doing it.
We're doing top calls. Okay, let's get to top calls right now. And of
it's
course,
still in the market, right? We're still like 45 minutes from the close.
yeah, about 40 minutes or so. All right, let's get to it. This is top calls. I'll look at some of the big movers on the back of analyst recommendations. Let's start with Talkspace. Needham rating the stock a hold with no price target. While the analyst considers Talkspace to be the leading online therapy platform, its penetration of the increasingly competitive mental health space is weak. He wants more evidence Talkspace can capture a larger consumer base before he turns bullish. The stock lower by more than 11%. Next in line is NextEra Energy, a downgrade to sector perform from outperform at RBC Capital Markets. The analyst there warns the renewable energy company's dividend could be at risk. She flags insufficient growth from wind repowering projects as one factor leading to a challenging road ahead. Shares down by more than 7%. And finally, UBS says buy Birkenstock. Analyst Jay Soleil ditches his neutral rating and gives the footwear company a street high $85 price target. He says Birkenstock has done a great job expanding its direct-to-consumer strategy and brand momentum post-Barbie, putting the company in position to achieve stronger sales and margins over the long term. The stock up by more than 2.5%, but still far below that price target of $85. And those are some of our top calls.
I'll pay for full price for Birkenstocks and face care. It's the only two things.
Invest in your face and your feet.
But just with Birkenstocks. All right, well, many U.S. travelers whipping out their Birkenstocks for comfort this week as they head to the airports for what's expected to be a record-breaking Independence Day period. The Transportation Security Administration is expecting to screen more than 32 million people through Monday, July 8th. That's up over 5% from last year. So for more on what all of this means for airlines, we're joined now by Stephen Trent, equity analyst over at Citi. All right, Stephen, what airlines are capturing all this demand?
Yeah, absolutely. Good afternoon, and thank you for having me. I think actually the network airlines are doing the best because they're in the right verticals. They do not rely on high volume, high utilization travel, as you saw with the discount airlines pre-pandemic. So when we think about wallet share in the U.S. airline space, the network airlines are really doing the job, especially Delta and United.
What about something like Southwest, which of course is facing pressure from activist investors and needs to rethink a whole lot of things, starting with its infrastructure?
Yeah, they're in a little bit of a tougher spot. So Southwest, they've done a great job on the balance sheet, but operationally they've had problems. The post-pandemic environment doesn't quite fit that model so well. We now have a lot more blended travel than we used to. So many U.S. consumers no longer in the office 5 days a week. That has changed consumer behavior, including the way consumers purchase tickets. And the airlines that are doing very well these days happen to be the ones with very good exposure to premium travel, which is not Southwest.
You have to wonder, too, Scarlett, about the capacity situation, which brings us to Boeing, right? Facing potentially criminal fraud charge with the DOJ, also having to buy Spirit and absorb that as well. But all that means that the planes they need to deliver, aren't being delivered. And you have to wonder, is that good or bad for airlines?
Yeah, that's a really good point. Well, how do you factor that in? Because there's still a shortage of aircraft. And we know that when JetBlue tried to make its acquisition and couldn't get anywhere with it.
Yeah, absolutely. That's tough. Certainly across the group, however, I would not say that the reaction to that is uniform. So if you go back to 2019 and you look at the size of the U.S. economy relative to domestic capacity, you had a little bit less than $24 of economic activity per available seat mile in 2019. Last year you had over $29. This year we'll have over $30. So that dearth of equipment on a per capita basis should over time get translated into higher unit revenue and higher fares, but not for everybody. We think it's going to be the premium airlines that are going to do well, mostly those two I mentioned.
Yeah. So those are your top picks, United and Delta, right?
Yes, Delta, United in the U.S. space, exactly. Panama and Copa Airlines, I'm also a huge fan.
All right, Stephen, hey, thanks a lot. We appreciate it. Stephen Trent joining us from Citi. We really appreciate that. Are you traveling this holiday weekend? I'm not.
No. And if I do, it's by car to maybe 45 minutes away.
Yeah, I'm going to a concert, but by car. All right. We're really cool. This is where we do it. I'll be in my Birkenstocks, though, where I come and I'm running to get some.
I am, too. I have 30 pairs, so.
She does. On oil, gas, the Permian, and more. We're going to talk to the chairman and founder of Landbridge. That company just went public last week. It's basically a royalty company. You used to see a lot of this with gold. This is kind of new to me in the oil space, but kind of get their take on the IPO market as well as oil prices, which oil staging a pretty solid rally despite any sort of oversupply that we've seen from OPEC. Yeah,
it'll be interesting to see if there's a direct connection, though, between oil prices and the business that this company does.
Yeah, and also where all the M&A and what that means for it, right? Permian has been super hot. What winds up happening if that moves to different basins where maybe the company is less exposed to? Anyway, we're going to get down to all of that as we're about a half an hour from the closing bell right here. First day of the second half of the year. This is Bloomberg.
It is just about 3:30 in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Alex Steele. About 30 minutes to the closing bell. One area of the market that's moving is oil prices. And there's really not a big catalyst. Maybe the hurricane for sure, really, that is coming. But you have WTI up by 2.5%. So let's stay in the energy space and turn to an IPO. So Landbridge started trading on Friday on the NYSE under the symbol LB. Shares soaring after the company sold 14.5 million shares for $17 each, raising more than $246 million. Now, Landbridge is an owner of land used in oil and gas production in the Permian Basin. They do some other stuff, but that's sort of the nuts and the bolts. Joining us now is chairman and founder David Capobianco joining us. David, just some broad strokes. What right now made it appealing to go public? Is it where the market was? Was it the oil price? What made it the right time?
Sure. Thanks, Alex. But first, thanks for having me. It's an honor to be here to talk about, and I'm excited to be here to talk about my new public company, Landbridge. So the reason we wanted to go public now, 2.5 years ago, we'd completed the formative transaction for Landbridge, a 71,000 acre position in the heart of the Delaware at the Texas-New Mexico state line. Over that period, we were able to grow EBITDA by almost 4x between then and now in a 2.5 year period. Recently, about 6 or 8 weeks ago, we closed a series of transactions for another 150,000 acres. So that brings us to about 220,000 acres at the Texas-New Mexico state line. And our strategy is to take it public now and share in the growth that we'll experience in the new surface position with all of our long-term partners and shareholders.
So you basically got big enough that it made sense. David, if I call you a royalty company, is that right or is that wrong?
Well, it's not wrong, but there's the streams of revenues come in a number of different ways. It comes in a fee stream, it comes in royalties, but it also comes in long-term revenue share and volumetric revenues related to the volumes of things like sand or water that moves across your surface.
So you described yourself as a low CapEx business. What do you spend money on versus your customers?
Yeah, so we don't spend CapEx at all. What our job to do, what we focus on doing is to enable and enhance and encourage our customers to build out infrastructure on our surface. We're a zero CapEx and an OpEx light business. So effectively, we are the best partners to industry, and we encourage the build out of infrastructure writ large on our surface.
And you're doing that in the Permian Basin. Why is the Permian Basin so attractive relative to other areas?
Well, there's a number of reasons, but first and foremost, our surface is in a really unique position at the Texas-New Mexico state line. In New Mexico, over the next 3 to 5 years, there'll be 3 to 5 million more barrels a day of water that need to find a home. Because of our location, that water will need to either, the lion's share of that water at least, will either need to be managed on our surface or go through our surface to be managed elsewhere. So we're in a really unique position in that regard, but that's just the water itself. There's also renewable infrastructure in solar and wind farms, and then there's digital infrastructure in Bitcoin and data centers.
So David, I guess what I'm struggling to understand is, so will the Permian keep its interest? And I understand that might be like a I don't know, hearsay when it comes to the oil world, but a lot of the M&A has already happened. It feels like the M&A juice in the Permian may be moving elsewhere into other basins. Are you noticing that on the leasing side of your business?
Well, so the first thing, we have only a small piece of mineral royalties. About 17% of our revenues are mineral royalties.
Okay.
So that's not a critical piece of our long-term business plan. No, the activity and the build-out of infrastructure, as I mentioned, is what we really focus on. But no, I'm not seeing a meaningful move out of our area. We're at the Texas and Mexico state line, which is the core of the Delaware, the heart of the Permian.
So for the other parts of your business then, and you were talking about how the build out has a lot of demand, what would stand in the way of that? I mean, the Wall Street Journal had a great piece out that said that Amazon Web Services is looking for its own power plant to power its data center. What are you seeing in your areas?
Yeah, so Alex, that's a great question. I think what I would expect to see is the build out of power plants to fuel data center development. And basically what you have to think about is where the data center is going to get built out. We need somewhere around 7 to 10 times more data centers over the next 5 to 7 years. So at first, all the data centers were built out around Langley, Virginia because of the fiber connectivity. Now, because of AI, fiber latency is not as big of an issue. So there's more than enough connectivity in the Permian Basin and in Texas to manage build out of a data center to make a large language model. So effectively what you need in the places where these things will get built is the places where there's low cost fuel. To run a gigawatt data center, you need a gigawatt of power. And actually you need a little bit more so you have excess reliability. But a gigawatt of power is really substantial. And that's what is going to drive this next digital infrastructure revolution.
You know, when we first talked about the Permian Basin, I kept thinking I should be aware of what oil prices are doing, and perhaps your company is tied in some ways to the trading of oil prices. Are there any asset prices to which your business is sensitive to that you look at as perhaps a gauge of what could happen?
Well, having those three infrastructure streams broadly, energy, renewables, and data centers, give you a pretty broad swath of different areas for us to grow and to increase our profitability. But what I would say is the lion's share of the growth over the next 3 to 4 years or so will come from energy and energy infrastructure build out, and predominantly from water. The interesting thing about water, particularly in the Delaware Basin, is that even in times where activity slows, water more like flattens its production rather than declining. And we saw that through a lot of the pandemic. And during the pandemic, water production flattened. It didn't continue to grow, but it flattened as opposed to sank the way a lot of other, development in oil and gas might. So part of that's driven by the fact that there's about 4-to-1 water to oil ratio in the Delaware Basin, and that water to oil ratio is growing. So you can say we are in fact tied, particularly in that part of the infrastructure category of our build out. We are in fact tied to energy, but effectively, if you think about it, we have a more stable part of energy in that water management.
All right, fair enough. Before I let you go, we're talking a lot about election risk today, and you IPO'd well before the November election. Are you worried that any policies will change regarding energy or data centers or from the IRA?
Most of the policies that are in place have been the culmination of a longer term trend. So yeah, things can change, and they always will, and you need to be nimble and ready to take advantage of the opportunity and manage any of the risks associated with it. But no, we don't see anything on the horizon that could change things meaningfully for us. We're pretty excited about the future.
David, really appreciate your joining us and spending some time with us here on The Close. David Capobianco is chairman of Landbridge. The stock, or I should say the company, went public late last week, and of course it's now in its second day of trading. I thought that was a great last question about asking about election risk, because I feel like increasingly it's something that we need to ask, even if a lot of people are not necessarily content to share exactly what they're thinking.
Which I think coming up in the next hour when we talk more about EVs and auto manufacturing, that's when it'll get really interesting, because it feels like, look, for the IRA, if you already put money and they're getting shovel ground ready projects, it's going to be hard to kind of abort that. But EVs and those subsidies could very much in some ways be on the chopping block. And also maybe hydrogen, like where does that go? Those are the two outliers that I'm hearing.
On a dime, for sure. And of course, people are going to be, as soon as something changes in terms of policy, they're going to say, forget that car, I'm not going to buy that one anymore, I'm going to go in this direction.
Right, or they're already doing that. And then that just makes it worse, I don't know.
All right, coming up, Keith Gill roaring influence may be silenced by pending litigation regarding GameStop. We're going to have the details in today's Stock of the Hour. This is The Close on Bloomberg. All right, it is time now for our stock of the hour, and we are watching shares of GameStop. Popular meme stock influencer Keith Gill, a.k.a. Roaring Kitty, hit with a lawsuit on Friday accusing him of orchestrating a pump-and-dump scheme to manipulate GME shares for his personal gain. Gill did not respond to a request for comment, but Abigail Doolittle has been following the story, and she is here with us with a little bit more. And it's not just GameStop that he's been involved in recently.
Yeah, it's also Chewy and the famous picture of what is now not just a dog, but it's also a puppy. That kind of detail has been given. Yeah, color. So, relative to this GameStop lawsuit, it clearly smells bad. It looks bad. It feels bad. It feels as though something is wrong. The spirit of the law of securities fraud maybe was stretched, maybe was broken, but was a law broken? Probably not, because he posted a picture of a meme. If somebody is going to infer from that, that means that he's going to buy GameStop and they buy it. They're doing it at their own choice. They're not being advised. There's no fiduciary relationship.
Because for pump and dump, you need to prove intent?
Well, I think that you need to prove that there was actually some sort of relationship between the person who is telling you what to do with the security and your own self. I thought it was actually even on an institutional basis, but it turns out individuals can in fact be accused of securities fraud, but there needs to be a fiduciary, there needs to be some sort of relationship where they're instructing the other person what to do. In this case, it's literally a picture. What kind of law are they going to create? You can't post memes of cartoon puppies. So, again, the spirit of the law may have been stretched, but I don't think that the law itself was broken. What makes this so interesting, though, there's a couple interesting things to me at this point. In terms of Chewy, he bought a position that is big enough that he had to disclose it to the SEC. It's a 6.6% stake. So it actually creates more scrutiny in a way on him. So when I think about it, what is he doing there? I feel as though he wants to legitimize himself in terms of these stock positions because with the GameStop position, both in April and May, there was questions as to whether he actually owned these 120,000 calls that this investor is suing him over. But now we have that credibility, but there's also that extra layer of scrutiny. So it's interesting. The other big question is he doing this alone, or is there some sort of syndicate behind him? And
syndicate?
Yeah, well, a group of people who, because it's a fair amount of money. I mean, I think that this position was almost, I should know that by heart, but I actually don't. But the Chewy position is really pretty significant.
$245 million or something like that, right?
Yep, exactly.
Well, what's interesting, too, is that if you're an investor in Chewy, what do you do now? So one analyst was saying, look, you're going to brace for what will be elevated volatility. But a lot of analysts actually like Chewy. But
Good
they're
point.
like, now you're in trouble, guys, because that volatility is definitely going to be there.
Yeah, harder to just hold and not think about it. You're going to be thinking about this volatility to some degree. From a technical standpoint, I will say on Chewy, the last time I looked, and this could be not true, and I actually don't have, I'm going to try, but the downtrend had been broken on last week's initial, 40% move higher on that meme that was put out. Right now, it's sort of on the cusp. So that's a really good question. And actually, as I look at it, it appears as though it may go back down. But it's hard to say. I mean, volatility is the name of the game.
All right, Abigail, thanks a lot. Really appreciate it. Abigail Doolittle joining us there. Okay, so some volatility on that side, but Microsoft is still at a record high. It's like a stealth high that we keep seeing here. Mag 7 continues as well. All right, coming up, we're going to talk to Omar Aguilar, CEO and CIO over at Schwab Asset Management, as we count you down to the closing bells right here in New York. This is Bloomberg.
I don't think the consensus is that the economy is slowing down. If you look at survey-based measures for how many folks are looking for recession in the next year, they're anywhere from 5 to 25%. That we think is too low, given where rates are, restrictive policy. We've seen the consumer savings drawn down. We know that the housing markets are starting to slow. So if anything, thus far, equity markets have delivered, but we're shying away a little bit more about that optimism in the second half of the year.
That was Mimi Duff, Managing Director at GenTrust, kicking the show off for us earlier. All right, Scar, let me see if you've heard this one before. The S&P kind of up, the S&P equal weighted definitely down. The Mag 7 hitting another record, and NVIDIA treading water. This doesn't feel like a very different scenario and setup.
Yeah, it sounds pretty familiar from the first half. This is definitely detritus from the first half. And what changes this outlook here? That's a big question.
Yeah, and also for the Russell and the equal weighted index, when do they start to truly get a bid? And at some point, does that wind up meaning something really negative for the economy rather than they just can't get a catch-up potential?
Yeah, well, that's a long-standing question. So let's put that question to Omar Aguilar, CEO and CIO at Schwab Asset Management. Omar, good to speak with you. Thank you so much. To Alex's point, at what point does the S&P Equal Weight Index and Russell 2000 actually get a bid that's sustainable, that lasts for more than a few days at a time?
Yeah, that's a great question. I think, these are all integrated, statistics between market performance, the economy, and of course, monetary policy. When you think about, the macro environment in combination with, earnings, that determines a lot of where we are in this. And this has been a very interesting cycle because, I think for the most part in the previous cycles, the different phases of the economic cycle you can clearly define. But after the pandemic, the phases of the cycle have been incredibly difficult to describe. And I think as of today, we're still in this slowdown and we see the economy slowing down. We see unemployment going up. We see still a fairly tight monetary policy, which may suggest we're in the last phase of the cycle ready for that recovery. So to answer the specific question, normally you see that equal weighted, those more cyclical stocks, those small caps, to actually do much better in the early part of the cycle, which were not there. However, we have been in this cycle that has been unusual. And for that reason, parts of the market are behaving like early cycle and parts of the economy are behaving like early cycle. And I think in many cases, a lot of these changes will have to wait for a catalyst. And in that case, it could be interest rates. It could be monetary policy.
Okay, waiting for a catalyst. We've been waiting for a catalyst like interest rates for a long time. And every time we think we're there, it gets pushed out a little bit further. Do you see the election playing a pivotal role here in terms of providing a catalyst? It certainly provided a catalyst for yields today.
Yeah, well, we have seen historically that the elections usually bring short-term volatility and usually creates that level of spreads that tend to be more like trading, attractive for traders as opposed to something that is more fundamentally and sustainable. I do expect and we expect that we will see that level of volatility as we get closer to the election. But when you think about long-term, when you think about what drives the market in the long term, a lot of the catalysts will have to be either, interest rates. It has to be, inflation. It has to be unemployment, the health of the economy, or earnings related. We came out of a very strong Q1, and I think the catalyst for seeing how the results are in Q2 in terms of earnings, that may determine, how fast you go into the next phase of the economic cycle.
Okay, let's go to earnings for a second because Goldman Sachs' David Kostin had a note out today talking about how corporate America faces the highest earnings bar in almost 3 years. And that's a scenario we really haven't seen. Do you think that that's going to be the case and a beat just won't be good enough?
I think we already saw a little bit of that in Q1. I think, again, the results of the earnings were better than expected and companies did very well. However, the reaction for the market was not as strong as, normally happens, or even with a beat, didn't necessarily ended up raising the stock prices, significantly. However, the market ended up taking a pretty significant, punishment for those companies that didn't, outperform their own expectations. I think going into the second quarter, because the earnings expectations have actually been low, I think the expectation might be that, companies should be in a good position to be able to, outperform. However, what we've seen here is this so-called word bifurcation, where we're going to see a little bit of more dispersion among stocks, the same way that we're seeing with inflation, the same thing we're seeing with the economy, and the same thing we see it with markets. I think in many cases, we're going to see that dispersion where consumer stocks will probably behave differently than energy or tech.
Well, fair enough. And to that point, I'm just looking at the year-to-date sector moves. And obviously tech and consumer communication services, that's one thing because that has more of the Mag 7. But then you got financials, energy, utilities. Those are then the next performing best sectors within the S&P. How does that change in the back half, or is this the playbook?
Well, it is an interesting question because on one hand, we have been talking about the level of concentration. So the level of concentration, that we have seen for the last 2 years will continue to be a big part of this because a lot of these companies that have driven, performance of markets, continue to generate very decent cash flow and continue to generate earnings growth, and the level of capex continues to increase. And when you think about that level of quality of earnings, while the pace may not be the same as what we saw in the last, 2 quarters of earnings, that will probably put a little bit of a potential for them to continue to do well. On the other hand, we have seen, those companies that tend to be more sensitive to interest rates at early cycle that actually have the potential for having a significantly, good quarter. And therefore, that's where, a lot of the potential early rotation may look like as people start to look more of financials, looking at areas like real estate and looking at areas that, for the most part, we're waiting for that interest rate catalyst, but they have actually done well even without changes in monetary policy.
Very quick question as a final question, Omar. What would you avoid? What would you not touch at all?
Well, I think at this point, what we have discussed with clients is to start. There is no reason and there is not a lot of upside to take a lot of credit risk. The credit market has been incredibly resilient. And therefore, when you think about fixed income, staying in the higher quality area, it's area that you have to go. We don't know, how fast the level of unemployment will potentially affect certain parts of the market. And therefore, staying away from the low credits and staying in high quality is what we try to emphasize to our clients.
All right, good stuff. Omar Aguilar, CEO and CIO at Schwab Asset Management. And it's a reminder, Alex, that when times are uncertain and you don't know what's coming around the corner, credit always leads. So you may not want to get ahead of that uncertainty with exposure to credit.
I know, but how long have we been hearing that and how much the outperformance and credit spreads continue to be really tight? Here's a fun stat from Torsten Slok over the weekend that top 10 companies in the S&P make a 35% of the market cap, but only 23% of earnings.
Ooh.
And you have to wonder that if expectations are high, if you don't really have a solid beat, how does that wind up shaking out in the back half?
Yeah, not good. Not like the first half necessarily. All right, we're moving you closer to the closing bell. Full market coverage right here on Bloomberg as we look at an S&P 500 that is slightly higher, up by 0.3.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Alex Steele here, and here to help you take us through the closing bell with a global simulcast. We're joined now by Tim Stenovic and Katie Greifeld. And of course, we bring together the best of Bloomberg Television, Bloomberg Radio, and YouTube audiences worldwide. As we parse through the most important parts of this trading day, was there an important part of this trading day today, Tim?
There wasn't an important part of the trading day, but I think it's actually an important week, even though it's a holiday-shortened trading week. Because we got a lot of economic data. We got a payrolls report coming on Friday. We get those Fed minutes on Wednesday. We get JOLTS tomorrow, Katie. So, and as you were pointing out earlier, volume wasn't actually lower than the 20-day average. So we're actually seeing a little bit of action.
I have to applaud you for making a lot out of nothing because, the jobs report obviously is top tier. And when it comes to volume, I have to imagine this is going to be maybe the last day that we see above average volume.
Hey, Fed minutes are not nothing.
They're pretty close to nothing. They're pretty dated.
No, you guys are missing the move. It was the bond market. You had a nice juicy move in the back end. You didn't want to take my thunder?
I don't want to take your thunder. Yeah.
And if you just look at it intraday, it was so interesting. We had some buying coming across right as that ISM manufacturing data hit that was a little weaker. We're going to talk about that later on in the next hour. And then boom, you got the Supreme Court decision on Trump immunity, and then bond yields had a pretty solid spike higher.
Yeah, it's not every day
this is the thunder we didn't want to take away, Alex.
Yeah.
Oh.
Well, we're going to get to the closing numbers for the indexes, for the equity indexes, and then we're going to get to recap everything in the bond market once again, because it's a big move.
All right. Thank you, Scarlett, for validating me. We are coming up to the close. Oh, there we go. The closing bells. We are off to the races. The first day of the second half of 2024. The Dow Jones Industrial Average up about 0.1%, up 43 points. The S&P 500 up 0.3%, up about 13 points. We're settling out here, but the Nasdaq is up by 0.8%, 146 points. And there you kind of settle out on this Monday.
All right, peeling back one of the layers of the S&P 500, we did see 126 stocks move higher. We had 375 stocks move lower, so speaks to some of those larger cap names, certainly powering the index higher by close to 0.3%.
All right, let's take a look at the IMAP and show you which sectors are really leading and lagging behind. The leaders here, tech, up by 1.3%, consumer discretionary up by 0.75%. That's really Tesla, and financials slightly higher. But there were 3 indexes or industries that did finish the day with at least 1% declines. We're talking materials, industrials, and REITs.
All right, you got the decliners today, Katie, so I get to do the gainers. When Carol's out, I get to do the gainers. I want to talk about shares of Tesla.
That was mean.
That was mean. Higher today by more than 6%. They jumped after we saw Chinese peers NIO and Li Auto report vehicle delivery data for the month of June that showed increases versus the same period a year ago. So some bullish news there. The move marks Tesla's 5th straight day of gains. It would be the longest winning streak in almost a year. We are going to get Tesla sales data a little bit later in the week, when we'll sort of see if the company delivered vehicles that are higher than they were last year. That's certainly an important metric for investors to watch. Also, earlier today, Wells Fargo added Tesla to its tactical ideas list for the third quarter. They said that the car maker's delivery growth looks set to decline. Okay. Shares of Apple also higher on this day today. It turns out that there's a report over at Apple Insider that's getting quite a bit of attention. Shares higher by close to 3%. Apple Insider reporting that the company has increased its order with TSMC on chips for the next iPhone, so certainly a bullish indicator there. Apple Insider reporting that the company's getting ready to sell from 90 to 100 million iPhone 16s. It's higher than the order volume of the previous version of the iPhone. And finally, checking out shares of Boeing. A lot of Boeing news today. Shares ended up finishing the day higher by 2.6%. The company agreed to buy back Spirit AeroSystems for $37.25 a share. It's an all-stock deal. It values Spirit at $4.7 billion. After 2 decades of being separate companies, they're actually getting back together. This all in an attempt to fix Boeing's manufacturing defects. Also, the U.S. Justice Department planning to charge Boeing with criminal fraud after finding the company violated a 2021 deferred prosecution agreement tied to 2 previous fatal crashes. That not sending shares of the company lower. George Ferguson over at Bloomberg Intelligence was on our program a little earlier. He said that it looks like that some of the challenges of getting to a better place are starting to get fixed, Katie.
All right, let's take a look at some of the decliners. And I wanted to highlight 2 travel names, 2 cruise names in particular. These are your 2 biggest losers in the S&P 500 on this pretty quiet day. Norwegian Cruise Lines down almost 6%. Carnival also down about 5.4%. This as Hurricane Beryl, and I hope I said that right, is rushing towards the Caribbean. So this, of course, is the strongest ever June hurricane, meaning it's the earliest storm to reach Category 4. And you're really seeing that reflected in a lot of the travel stocks today, particularly in the cruises. So pretty bad day for Norwegian and Carnival, of course. And then had to talk about Chewy. Chewy, it actually was a gainer, and then it pretty quickly turned into a decliner. It's going to finish the day down almost 7% or so. I think we all know the story by now, but basically Keith Gill, Roaring Kitty, of course, of GameStop fame, he disclosed a 6.6 passive stake in Chewy. This was according to a disclosure with the SEC. He owns roughly 9 million Class A shares. Initially, that provided a pop that, formal disclosure, but that quickly turned into actually a pretty bad day for Chewy.
Fair enough. That was good. I thought you guys both did well. I thought you did a great job with gainers. Just putting it out there.
What's going on with yields?
Yields, okay, they're doing stuff. You guys are all like, nothing happened today, but they definitely did in the back end. So front end, sure, nothing really happened. But the back end had some nice movement here, up by about 8 basis points on the 20-year, and then the 10-year up by 7 basis points. So MLive had a nice piece out that said if you hit 4.5% on the 10-year, you're going to have some buying come in as a sell-off kind of reaches its max, and 4.5% becomes kind of appealing. So now I'm kind of watching that level as we have jobs on Friday, we have the minutes on Wednesday. So I think that could be quite interesting.
All right. Hey, I'm just want to do a quick correction that Wells Fargo put Tesla on its tactical ideas as a best short. So,
clarification.
Yeah,
Thank
I want
you.
to thank Thomas
sense.
Thornton for getting in touch over the IB for pointing that out. I appreciate
so
that, Thomas.
well
I know. So I did mess it up. Hey,
oh, that sucks. Katie did it to you, man. I think that was just Katie.
It is Katie.
Yeah.
Hey, I wanted to talk a little bit about Taylor Swift. Did you guys go to the Eras tour?
No.
Yeah. Neither did we.
My daughter's still asking to go, and we tried to tell her, be like, look, spending 10 grand to go to Poland to see a concert isn't something we can do.
Yeah, but think about how cheap things will be once you get over there.
That's adding it all in there. Okay. But anyway.
Well, the reason we're talking about this is because the company that actually builds and designs the stages, it's called Tate. It was started back in 1978. It's an engineering firm. And they don't just do the Eras Tour. They don't just do Taylor Swift shows. But they are exploring a potential sale, according to people with knowledge of the matter. And it could value them, Katie, at over $1 billion.
And Taylor Swift is a repeat customer here. That she also used them for her Reputation tour back in 2018. They also did Rihanna's Super Bowl halftime show and Beyonce's Renaissance World Tour in 2023. You have to think that that's all really great advertising if you build stages to have, some of the most famous people in the world on your stages.
I agree totally, but they're doing this, or they're talking about potentially going public right around the Taylor Swift tour. So it's the Taylor halo effect. Right?
It's the peak Tay-Tay? Is that
peak Tay-Tay? Maybe.
Is that what that is? I mean, I feel like we've been saying that for a while.
Could very well be.
Here's another story that, guys, I just loved. So Inca, if I'm saying that right, Investments, is the investment arm of the largest IKEA retailer. And apparently they're taking a stake in a new tower going up on Manhattan's Fifth Avenue. It's 570 Fifth Avenue. It's around 47th and Fifth Avenue. It's a huge tower, and it's going to have, quote, IKEA customer meeting point. I have zero idea what that is.
I just want to make a joke about building the tower with the directions that you get from IKEA.
That's pretty good.
That's all
it's
I
not going to be
right
like
now.
the Billy
If you have any
bookshelf.
questions, you call them up when you're putting it together.
Oh my God! Can you imagine that booklet that they hand you? And
How thick would that be?
The little things that you hammer in and you crying because it's so hard.
My reaction reading this story was, do we need an IKEA on Fifth Avenue? I mean, these customer meeting points, maybe that implies that it's not just the factory or, the storefront where those enormous, just tunnels of hallways of IKEA furniture. Clearly, I have some negative memories there, but is that what you need right on Fifth Avenue?
But if you don't have the actual full showroom, then what are you really showing people?
Unless there is a full showroom, unless it is that.
Yeah, well, that's the question. I mean, Katie's asking whether we need it, but if you don't have that and you just have a truncated version of the showroom, I think they did that near our office. It's not the full IKEA experience. You got to go in there and be prepared to spend the whole day.
What if that's
maybe take a nap on the bed and get some Swedish meatballs.
And if your relationship isn't testing and on the line when you're in IKEA, what's the point? Because that's the only way you know if you're set.
I'm glad you went there, Alex.
Yeah, not even the meatballs can help that.
Are you guys going to be here tomorrow?
We are.
Yeah, we are.
Good news.
I'm also here, which is huge.
Great. We'll be back together tomorrow. That is going to do it for the closing bell. It's our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals and YouTube. Meantime, catch us tomorrow, same time and same place.
All right, coming up on the close, we've got Dan Ives. He's the senior analyst at Wedbush. He's bullish on tech stocks for the rest of the year. So if you've missed out on the rally so far, do not fear. He says, stay in it. He'll tell us why. This is the close on Bloomberg. Welcome back to The Close. I'm Scarlett Fu.
And I'm Alex Steele. Let's take a look at where markets closed, kicking off that first day of the second half. I just can't say that right. It sounds good in my head. So here we are. The S&P closed up by about 0.3%. Volume picked up a little bit and then it kind of died out. The Nasdaq 100 is up 0.6%. The Mag 7 hit another record. That's really led by Microsoft hitting a record as well. The Bloomberg Dollar Index did get a boost of 0.1%. We did have some of the safety trades like the Swiss franc and the yen kind of unwind after everything kind of settled relatively okay over in France in that primary election. And the 10-year yield moved higher, up 7 basis points. Again, you did see buying come in a little bit when we had a weaker ISM manufacturing number. And then the selling continued throughout the day after you got the Trump immunity ruling from the Supreme Court. Many looking at 4.5% on that 10-year to see if you want to come in and buy after the sell-off, Scar.
All right, we're going to get focused on the manufacturing numbers a little bit later on. But you mentioned France. So here's the ETF that tracks French stocks. EWQ is the ticker. Up for the first time in 5 days, rising more than 1.5 or 1.3%, I should say. Basically on relief that the far-right party won less of that vote in the first round of elections than it needs to secure an absolute majority. So Emmanuel Macron, of course, making a big bet that the far-right will fail to clinch an absolute majority in the final round next week. And, of course, the other parties are working together to see if they can make something happen. Tesla up by more than 6%, the biggest gainer in the S&P 500 and the Nasdaq 100. Best one-day rally in 2 months and a fifth day of gains. And this after Chinese rivals NIO and Li Auto Auto reported June delivery data rising from last year. And of course, before Tesla itself reports its sales data. And of course, we'll bring you that when it happens. But that brings us to our top story this hour. U.S. manufacturing stuck in low gear. High borrowing costs, businesses reluctant to invest because of uncertainty, and inconsistent consumer spending has left the ISM Manufacturing Index contracting for a third straight month. We're going to take a closer look at where automakers, including EV companies, fit into this dynamic.
Yeah, looking forward to that conversation. Also taking a look at tech. You had a great first half of the year for technology stocks. NVIDIA actually closing up 0.7% today despite earlier weakness. Dan Ives, senior analyst at Wedbush, expecting a 15% increase in tech stocks for the rest of the year, writing, "We believe the NASDAQ has another strong second half ahead, with tech fundamentals set to accelerate as AI use cases materially expand." Dan joins us on set in yet another very colorful outfit. He did put off the hat and the sunglasses, which really made the look, but that's cool. We'll
Thank you.
I
appreciate it.
Okay, so walk us through your thesis. We've had the big run. We know you're bullish on tech. Materially, what are we going to see the difference in the second half?
I think now it's the second, third, fourth derivatives of AI playing out. Because it's not just about godfather of AI, Jensen, NVIDIA, and of course Microsoft and Nadella. Now we're going to see on the consumer side, and where really Apple is going to be Cook's going to be the DJ at that consumer AI party, and then you're going to have software, Palantir, the Messi of AI, front and center, ServiceNow, MongoDB. In my opinion, this is going to be a tech bull market that continues for the next few years, and even though it's summer, I think there's going to be a lot of bears over July 4th in their caves, in hibernation moves, with their spreadsheets and valuation, missing this tech bull market.
What I found so interesting about your note was that sort of Apple play, that the AI part of the consumer, like how me and Scarlett are going to be buying AI, has not yet at all been talked about in the same way. And that really, truly is an Apple with their massive install base.
Exactly. I mean, like, we thought being at Apple for WWDC, a historical moment. Because most consumers, 20 to 25% in the world, they're going to access AI through an Apple device. Now, someone will be like, okay, well, ChatGPT, what's that going to do for me? This is just the start, because you're going to have hundreds of apps that are going to be built on generative AI for Apple. That's just more money for them as services. And what I believe drives an AI-driven super cycle, starting with iPhone 16. You saw some of those numbers. We saw it in our checks in Asia. This is robust. So anyone betting against Apple is like betting against Tom Brady coming out of Michigan 2000 draft.
So I appreciate that comparison.
Yeah, I'm like,
there.
What?
So this idea that up until now, Apple's iPhones have seen like incremental improvements, but nothing that's really a game changer. With the AI addition, the AI features, the iPhone 16 has the potential to be a real game changer. Does it matter then that up until now, Apple was kind of late to the party with all things AI? It really didn't have much of a role to play.
They could be late, because with 2.2 billion iOS devices, 1.5 billion iPhones, you could be late, but ultimately they'll still be the best, because it comes down to they have that ecosystem and no one else has. And I think that's the difference. You talk about Samsung and others, but on the consumer AI, everything we've talked about is enterprise AI in terms of Jensen, Microsoft. Consumer AI, this party starts in September when they launch this next iPhone. And I believe from an AI, in the AI party, it's 9 p.m. and this goes to 4 a.m.
Okay, and has Apple arrived at the party yet?
They're just getting there at the party. Velvet ropes are there. Now Apple's in. Now Amazon's like, let me on the dance floor, because Amazon wants to get in the AI party. But as these companies get in the AI party, that's key to the multiple. It's key to what we see in terms of tech. And the best part is this is a broader tech rally that I believe starts in the second half of the year.
Okay, so if you're a recent graduate and you got some money that you want to put to work in the market.
You're asking for a friend, obviously.
I'm asking for a friend, clearly. NVIDIA seems like the no-brainer, yet no one wants to put money into something that has just skyrocketed like that, whose stock chart went like that. Do you then go for the second or third or fourth derivative, or do you go with the original guys?
Look, I think NVIDIA is going to get, it's still their world, Jensen's world, everyone else paying rent, in terms of the only show in town. And even though Lisa Su and AMD and others are, are let's say on their heels, this is one that I still see $3-4 trillion companies a year from now. It's not just NVIDIA, Microsoft, Apple, and then look at the rest of the software, ServiceNow, Oracle. Cybersecurity is going to be a huge beneficiary, Palo Alto, Zscaler, CrowdStrike. And of course, Apple, I think Apple, this is going to be a massive renaissance of growth And this is the difference. Second half, the monetization of AI is going to start. And that's why I think many that have missed the transformational tech names over the last 20 years, from Meta to Apple to Tesla to Microsoft and others, they'll miss this again. Because again, you can see AI in your spreadsheets or valuation, or from the 10th floor of your New York City office building. That's why we travel so much around the world to see it.
Before I let you go, I've been wondering a lot about this. What is the cyclical nature of AI? Do we know how long or short those cycles will be?
Good question.
I think this is going to be, we're talking about a 10-year cycle, because for every dollar spent on an NVIDIA chip, it's an 8 to 10 multiplier across the rest of tech, which means get the popcorn ready. The rest of this tech bull market's just begun.
What is this most similar to? Is there a historical analog to this?
I just say covering tech for 25 years, 1995, but it's not 1999. So 1995 started the internet, but I don't believe at 4 a.m. that this is a crash. You could still have some after parties.
All right, Dan Ives, senior analyst at Wedbush Securities. He is dressed for the after parties as well. Coming up, we've got the top three, where we focus in on the top three movers and shakers at the center of the day's big stories. This is The Close.
I looked at, with a partner or two, we looked at some soccer, we looked at some hockey, but really the Celtics is more than enough for me. I really am the day-to-day CEO as well as the governor, and so it's my responsibility. When it goes badly, for sure, you can blame me, and I blame myself. So I spend a lot of time on the Celtics and care deeply about it.
That was Boston Celtics lead owner and Governor Wyc Grousbeck speaking with us back in October. There is news that the reigning NBA champion Celtics are going on the market. Joining us now with the latest is Bloomberg's Randall Williams. Randall, this is a surprise. The Celtics just won the NBA championship and the owners want to sell?
Absolutely. It came as a shock to us all. And, I made some calls earlier this morning to see what exactly was happening. And even before the release out, I heard that it had to do with estate planning. And that's what they said in the release. So whatever conversations that they had internally led to the decision that they posted today.
When they say they want to sell the franchise for estate and family planning considerations, it sounds like when someone resigns from a top job that they want to spend time with their family. That doesn't get at what is probably happening. Is there talk amongst the people that you speak with regularly that this could mark the peak of franchise valuations?
Well, I think that no matter what, it's going to go more than what the Suns sold for. The Suns sold for $4 billion. The Celtics are obviously one of the premier franchises. They have the most NBA championships. They're coming off an NBA championship. So as we look at these valuations right here, at the bottom of it, it's going to be $4 billion. At the maximum, I could see 7, I could see 6. It's going to go for a lot of money if they truly do indeed intend on selling.
So, Randall, I know pretty much nothing about sports. I don't make any surprise about that. But when this headline crossed, like Scarlett's whole row just was like, oh my God. And it was like a rip up the script kind of moment. Well, why was it such a big deal?
Well, if you think of it in terms of global companies, let's say tech companies, Google, Apple, Amazon, this is, in basketball terms, this is like a Microsoft selling or something to that extent, because this is one of the premier franchises. It's Lakers, Warriors, Knicks, Celtics. That's the top of the NBA. And so when you have one of those, why would you ever want to sell one of the biggest, most valuable, most successful franchises out there, unless there's something that, maybe they just want to get out of, or maybe they foresee some business things. I'm not really sure there, but it's a very big deal. In the NFL, this would be equivalent to a 49ers being for sale. And the MLB, one could say this would be almost like the Yankees going for sale. So it's huge.
It's huge, and there's a lot of people, a lot of investors, a lot of institutions that do want to get in on sports because they see it as an uncorrelated asset. So, Randall, one thing that makes it an uncorrelated asset is, of course, the value of the franchises, which has gone up as media rights have become more expensive. The NBA is still negotiating its next media rights deal, and it has not finalized anything yet, right?
No, it's still being negotiated. I was actually at the NBA's office last week, and I asked them about it, and they told me exactly what I just told you, is that it's still in progress. An announcement is to be determined, so we'll have to wait and see. But as Lucas Shaw reported earlier, I want to say it was almost 2 months ago now, that And they were finalizing a deal with ESPN/Disney, Amazon, and of course Comcast and NBC. So we'll have to see where Warner Brothers Discovery turns out and all of that, but nothing is final yet. So we could be in for a surprise, or it could just be announced with the 3 partners that Lucas reported on.
Yeah, and of course, the commissioner of the NBA, Adam Silver, said that once they're finished with finalizing the deal, then they could move ahead with the league expansion as well. And we're talking about another 2 teams perhaps being added to the NBA, in addition to maybe the Boston Celtics being for sale. Randall, thank you as always. Bloomberg's Randall Williams covering the business of sports for us. Let's segue now to the top 3, where we name drop the people driving some of the day's most talked about stories. First up is Will Smith making his rap comeback at the BET Awards. He was performing the live debut of his latest single, You Can Make It. And I didn't actually watch it yet, but I'm wondering whether there are any references to something that may have happened, I don't know, a year and a half ago.
And then moving on from that and then becoming, getting on top. Talk about getting on top. Let's talk about Simone Biles, 4-time champion gymnast qualifying for the Paris Olympics. And I mean, yes, she fell on the beam, but man, you look at her tumbling, it is really unreal. And what I found so amazing about the Paris Olympics also is that there's a 16-year-old on it. She's a junior high school student, and she's made the Olympic team. That's just really amazing. Yes, Hesley Rivera made it. She's 16. She's from Jersey. She's the lone fresh face with all of these amazing veterans in a junior in high school.
Apparently, there was a string of injuries in the last few days because up until recently, they thought that they could easily field 2 full teams of very accomplished women, but a lot of people got injured. And so now we have, as you mentioned, this team mainly full of veterans and 1 fresh-faced newbie.
Yeah, I definitely went down the rabbit hole for 20 minutes prepping for the show where I was like, I'm going to watch that floor routine.
You're a former gymnast, right?
Yeah, but let's, I wasn't that kind of gymnast.
What was your event?
My event was beam.
Oh.
Yeah, so I had no flexibility, but I was really strong, so I could do the stuff.
This is fascinating. We can talk about this more later. So you have really good balance then.
I did have really good balance. I can't say for sure if that's the state case now.
All right, the third person on tap that we're watching is Steve Bannon. The former Trump aide reported to a low-security prison today in Danbury, Connecticut. He is set to serve a 4-month sentence for contempt of Congress that's linked to the January 6th investigation. Remember, a jury found him guilty 2 years ago because he refused to testify and hand over documents to the committee that was investigating January 6th.
But isn't he also still podcasting? The New York Times had a piece out saying he's going to prison, but his podcasts won't stop.
I don't know how, well, I mean, it's low security prison, but he did record something today before he reported to prison. So
maybe there's like a break. So he will be his last for 4 months.
Perhaps.
But then he will continue his podcasting to help retain his influence, so to speak.
By the way, I don't know if you want to say he's in good company, but other Trump aides that have served time include Peter Navarro, Paul Manafort, Michael Cohen, and Alan Weisselberg.
That is definitely a list. Okay, coming up, staying in politics, divided Supreme Court issuing its ruling in the Trump immunity case. We're going to take a closer look at the decision and what it could mean for the November election. Just a reminder here, the markets are closed up for the first day of the second half of the year. The S&P closing up by about 0.3%. This is Bloomberg.
The big headline of the day was the Supreme Court ruling that Donald Trump has some immunity from criminal charges for trying to reverse the 2020 election results, all but ensuring that a trial will not happen before the November election. For more now, let's bring in Balance of Power co-host Kailey Leinz. So, Kailey, the decision finally came down. It was 6-3, pretty much along ideological lines. What happens next?
Well, the court essentially, while it did rule today, Scarlett, that Donald Trump does have immunity for official acts, stopped short of defining what exactly those official acts are, instead kicking it back down to the lower district court, in which the judge in this Washington case that was brought against Donald Trump by special counsel Jack Smith, the judge named Tanya Chutkan, is essentially going to have to do the delineating between what is an official act protected by the powers of the presidency and the Constitution versus a private act. What was Donald Trump doing simply as a presidential candidate, not as president? That is effort that could take some time. So what the court ruling today effectively did, aside from setting a precedent for all future presidents going forward about what they can do within the office of the presidency without fearing prosecution, they also effectively today have delayed this trial to the extent that it is highly unlikely that it will not be seen before the election in November, because Judge Chutkan has said she would give both parties at least 3 months to prepare for a trial. But all of these questions about official versus unofficial acts are going to have to be answered first.
So what does it mean for the actual election? Do we know yet, Kailey?
Well, what we have seen historically, at least to this point in the election cycle, is that Donald Trump has shown an incredible ability to fundraise off of his legal troubles and has found with his base a resonance in this idea that the justice system has been operating against him. Potentially, this could undo some of that argument, as the court did rule somewhat in Trump's favor today. But it does have the effect of freeing up his travel schedule. Remember, for months, he was stuck in that courtroom in New York where he was found guilty of 34 felony counts of falsifying business records and was kept off the campaign trail in that courtroom every day. This campaign can now schedule him between now and November as they please without having concern about him needing to be present at a trial. So that is on the Trump side. For the Biden side, this has today taken a little bit of oxygen out of what we have been talking about here in Washington for the past 4 days, which was the poor performance of Joe Biden in last week's presidential debate. Takes some of the heat off of him for today, though still that contrast is going to remain and continue to cycle out throughout the next several months, as there is some chatter about whether or not Joe Biden will continue forward as the Democratic nominee. Though Bloomberg is reporting today, I would point out the DNC is considering actually formally appointing him as nominee as early as July to kind of stamp down some of those concerns that are percolating throughout the party.
Yeah, what you just described sounds like Trump unleashed. He's kind of free and has free reign and can go off and do different things. We know that after the decision came out, he posted on social media, lots of all caps, lots of exclamation points. Any response from the Biden campaign, from the White House?
We have gotten a response from the White House, specifically the Office of White House Counsel, the spokesman there, Ian Sims, who said, as President Biden said, nobody is above the law. They say that that is a core American principle in how the system of justice works. What's interesting is that that phrase, nobody is above the law, also showed up in the majority opinion of Chief Justice John Roberts, who was simultaneously ruling that there are official actions the president can take that do have at least presumptive immunity from prosecution. So some could argue that seems that the president is above the law, at least in some cases in regard to his official actions. Certainly a new legal precedent seems to have been set today. I would point out as well that there was a pretty vocal dissent among the liberal justices on the court, including Justice Sonia Sotomayor, who said this decision today makes her have fear for our democracy. That's how she signed off, I dissent.
Has there been any talk, Kailey, that certain judges should have recused themselves on the decision or not?
In Democratic circles, yes, Alex. Of course, this is a court that not only has handed down a number of consequential decisions that could influence the presidential election, but has been facing a lot of calls on the Democratic side for certain justices, including Samuel Alito, who, of course, has been embroiled in controversy over flags affiliated with January 6 rioters that were seen flying outside of his home, to Clarence Thomas, who has had a lot of ethics concerns of his own and, of course, has the affiliation of being married to Ginny Thomas, his wife, who was involved in some of these 2020 election efforts as well. So there was a concerted effort on the part of many Democrats, including the chair of the Senate Judiciary Committee, Dick Durbin, for those justices to recuse themselves. But there is no enforcement mechanism for that realistically, as you would need the House on board to do any kind of impeaching of a Supreme Court justice. And while in the aftermath of these ethics concerns, the court did put out an ethics code, it's not actually enforceable. So there's great limits on forcing a justice to recuse if they do not want to. And they obviously did not in this case. All 9 justices ruled again 6-3 on ideological lines.
All right, Kailey, thanks a lot. Really appreciate Bloomberg's Kailey Leinz, co-host of Balance of Power. And we're starting to see the notes come in about what a Trump presidency would look like. Morgan Stanley talking about that. You're going to see higher inflation, lower growth, what that means for the bond market, steeper curve, what it means for the equity market.
And you saw that play out in the intraday chart of the 10-year yield, right? The announcement came out around 10:30 a.m. or so, 10:40 a.m., and we saw yields spike as those headlines crossed. So definitely something that investors are starting to take into account, even though it is only July. I mean, when was the last time that you had assets moving on election, headlines.
What's also so interesting is that, historically, if you go back, right, like President Biden was supposed to be really terrible for energy, and yet energy stocks are higher than they were under President Trump. So it's like, do those things even
play
last?
out? Yeah.
Or maybe the fiscal deficit's a different story. I don't know.
The fiscal deficit's always its own story. Let's take a look at how markets closed on the day. I mentioned that yields rose in the wake of that Supreme Court decision. You can see the 10-year yield did move up about 7 basis points to 4.46%. The S&P 500 gaining about 0.25%. A mixed day overall, and relief across Europe, Alex, on the French elections. They were certainly bad for Macron's party. They were good for Marine Le Pen's party, but perhaps not as good as some had feared.
Yeah, I was still surprised by that reaction. There was a pretty solid sell-off in the German bond market, and that seemed pretty intense.
Well, there's another round of elections. We'll see what happens next week. This is The Close.
Friday is jobs day. Today, manufacturing day. ISM Manufacturing data contracting slightly for a third straight month in June. You got the good news, prices dropping, employment stable. Bad news, production and revenue both coming down. Joining us for more is Timothy Fiore, chair of the ISM Manufacturing Business Survey Committee. Tim, always a pleasure. Can you walk us through some of the granulars? What really stood out in terms of the good and the bad?
Sure. So if you're a Fed watcher and you're looking for rate cuts, this is a really strong report to indicate that we should probably do something. And the reason I'm saying that is that we've had demand still pretty much non-existent, very slow, very gradual, really hard to find it, backlog at 21-month lows, very bad. The key this month is that our revenue is falling off, defined by production, which has been something I've been warning about. We're now there. If it remains there for the next couple of months, it's going to drive employment actions. But the good news is that on the pricing index at 52, that's a really weak expansion. And remember, last month we were 57, and then the PCE came out last Friday supporting that decline in price increases. So you could easily argue that PCE for the month of June is going to be even less than what it was in May, which is very positive. So if you're looking for rate cuts, this is a report to support that.
So, Tim, if I'm a manufacturer, what's going to get me to spend more money? Is it just one rate cut? Is it the trajectory? Or do I need like 75 basis points of cuts? What's going to get me going again?
I think it's the confidence that we've started to go into a normalization. We're still restrictive. I think everybody kind of agrees this is restrictive. I don't think going to accommodative is necessary, but moving closer to neutral would definitely send a good signal, because what our manufacturers are not investing in is working capital, defined by inventory, as well as CapEx investment to replace worn out capital, as well as expand with new capital. Nobody's willing to do that because the bond rates are still way too high. And if the interest rates stay high, those bond rates will stay high, and people are going to be reluctant to commit to more commitments on a financing standpoint when they could be doubling their interest expenses.
Right. So it's a holding pattern until something changes on the interest rate front and materially reduces their borrowing costs. When I think about our manufacturing economy, and it used to be fairly small. It definitely shrunk down as the U.S. outsourced a lot of those jobs overseas. And now we're trying to reshore a lot of those jobs, or nearshore a lot of those jobs. Can you talk a little bit about the trajectory of the manufacturing economy, the growth of it here? Even though there's contraction, the size of it overall has kind of come back, hasn't it?
Well, I mean, we're sitting at somewhere around 10% of U.S. GDP. Back in the 70s, we were 22%. So we've cut almost half of our contribution. We do affect about 25% of the service side too. So the 10% isn't a standalone. We impact that other 25%. There is a bunch of reshoring going on. It's not very public because, if I have product in China or someplace overseas that I wanted to bring back or near shore, I wouldn't be out publicizing it because I wouldn't want my existing suppliers to know that they have a short life with me. So there's definitely activity going on. But, if we're not investing in more CapEx now, that really means we're not expanding our capacity. So, how much is actually coming over? It's probably going to be a long time to see that reshoring actually have an impact. I don't think we're seeing that impact now.
I see. And just to give us some context, when a company says it is looking to reshore or nearshore in the most general of terms because they don't want to tip off anyone or anger any of their partners, how long does it take before something actually gets built in the U.S.?
Well, it depends on the complexity of the product. And you always want to plan for a 3-month overlap. So you want enough inventory coming in to cover the 3-month startup. And even then, many times it turns out to be not enough. But you're probably looking at 9 months to a year, depending on the complexity of the product. You've got to do tool prove out, you got to do first piece inspections, then you do a limited production run, then you do a full production run. Most likely in this environment, what you're going to see is a dual sourcing activity. You're not going to see a single source back to the U.S. and cut off any overseas suppliers. You're probably going to see a dual source. So you'll establish a capability here, call it 25%. Then over time, depending on what's happening geopolitically, you'll increase that to 30, 50, and so on. Because, hey, frankly, with the current environment that we have in the United States, it's not so much manufacturing friendly. We have environmental rules. We have strong labor situation right now. And in a lot of reasons, that's why we went overseas in the first place. So are consumers willing to spend 15, 20% more for the stuff they buy at Walmart? I don't think so.
Yeah.
So this is going to be a slow activity. And it's more for supply chain assurance because it's definitely not for cost savings.
So, Tim, before we let you go, could you just go through the industries that you talk to within manufacturing? Like, what are still doing well and spending, and then which are the laggards?
Yeah, I like that. So our chemical products and fabricated metal products, those are both feeder industries that feed the other 16 industry sectors. We have 18 industry sectors that make up the manufacturing economy. The chemical products we've been watching for over a year and a half to see its life and see it expand faster than the rest. It's expanding at, say, a 52, not really hard, but it's expanding nonetheless. The fabricated metal products that's really tied to construction and the building out of capital goods, long life goods, that's not in a good situation right now. That's like at 45. So it kind of indicates, I think I mentioned last month, Alex, that people are saying that there's been a slow start to the construction business boom in the summertime. Well, this month, it kind of indicates that it's not going to meet expectations. It's not so much a slow start. It's going to be less than what was expected. So, you get those two. You got computer electronics finally coming back slightly below 50, but, close. The ones that concern me are the capital intensive ones. Machinery, think yellow goods, farm goods, appliances. That thing's down like 45 or less. It's not in a good situation. I mentioned fabricated metal products, not in a good situation either. The surprise this month is transportation equipment, our number 2 industry sector, and we're sitting at about 48. That's the lowest number I've seen since the pandemic. That's concerning, but I guess not that surprising given the fact that transportation has been very weak for a couple of years. It's finally hitting the trucking industry. And I think the new cars that people want to buy, they've bought them. There's enough inventory out there to get them. So you can't look at the automotive side for upside. And the aerospace industry is just still clogged up with a lot of supply chain issues and just can't seem to get out of its own way. The aerospace side, I think, is 35% of transportation equipment. So if aerospace came back stronger, maybe with defense spending, we'd see that grow a bit. But that's a bit alarming. So anything that has long lead times and is a long life unit is slow. And so if we relax the rates a little bit, you're going to see people have a little bit more confidence. They're going to go ahead and make commitments, take some risk. Right now, nobody's willing to take risk.
Timothy, really, really appreciate your joining us. That was fantastic context there on the latest ISM numbers. Timothy Fiore is chair of the ISM Manufacturing Business Survey Committee. And of course, he mentioned the transportation sector at 48 and auto companies. Tesla expected to release its latest sales numbers tomorrow, and the shares rising for a 5th day after Chinese peers NIO and Li Auto reported vehicle delivery increases. So to get some context on what Tesla may report and to get a better understanding of where the auto sector stands right now, let's bring in Stephanie Valdez Streaty. She is Director of Industry Insights at Cox Automotive. So good to speak with you, Stephanie. And I know that you were listening to what Tim Fiore was just telling us as well about how there's reluctance to spend for a lot of these manufacturers because of high interest rate costs. They don't want to be caught out spending and paying this amount, especially when they don't know the direction of interest rates in the next couple of months. Do you see that playing out in the auto sector?
Oh, definitely. If you think about with the automotive sector, especially if you think about EVs specifically, affordability is a huge issue. And then if you think about interest rates And then the other big thing is the uncertainty in the economy, right? The uncertainty with the upcoming election. So I think that's really causing consumers to hold off on buying a vehicle. And once again, like I said, the affordability is huge. And I think for Tesla specifically, they're navigating the waves. They've, trying to, figure out how do they compete globally. They have Chinese competition. In Europe, they have a lot of subsidies declining. And then here in the US, lots of competition, right? Lots of competition with companies, auto companies putting out new product, and consumers love new product. I think the big thing will be to bring more affordable vehicles into the market, and I think that's going to help the manufacturers.
Yeah, but they haven't given any kind of specific time frame on when a more affordable EV will be launched, and a lot of people talk about the product cycle at Tesla being kind of stale because there hasn't been a new product release in a while. That being the case, Stephanie, when Elon Musk talks about Tesla being an AI or robotics company, as an auto industry analyst, what does that mean to you? What is he signaling?
Yeah, I think he's signaling that's kind of like the big focus now and really taking priority. And I think if you think about just in terms of Wall Street, right, that's with the Tesla stock, they keep putting, the value of his company on his focus on AI, robotics, that type of thing. And I think what's happening, though, is it's taking away priority on the product line, the product roadmap. And so, like as you mentioned, there isn't a definitive timeline for launching a new affordable EV, which they definitely need. They had a refresh of the Model 3, but nothing major, no major redesign. They had the Cybertruck, limited volumes. So I think for Tesla to compete and continue to hold on to share, it's going to need some more new product. It's going to probably be the second quarter for declines in sales in the U.S. I'm talking about the U.S. We're forecasting probably a 15% decline year over year for Tesla. And depending on what the June numbers are, this could be the first quarter for Tesla to have a below 50% market share. So time will tell, but that's kind of the direction we're seeing for Tesla.
We also talked, Stephanie, a lot about the U.S. election today, and it does feel like one of the chopping block items could be the EV subsidies if President Trump wins the White House. How does a Tesla fare in that situation when they don't have any hybrid vehicles, for example?
No, I think that's huge. I think that's very much at risk. But I think not only does it hurt Tesla, I think it hurts all manufacturers, right? Because I think for consumers, a gas hybrid is a good gateway for full electrification. And as you mentioned, just from affordability, it's pretty comparable in a lot of cases to ICE vehicles, internal combustion engine vehicles. So I think the IRA, in terms of the election, the vulnerability of that could really have an impact on sales.
Do you feel like the numbers for sentiment around Tesla matter, or it's just going to be the vibe? Like if it's less bad than we thought, or if the hype is still good, does it matter?
I think you mean in terms of their brand positioning?
Well, I mean, I'm specifically thinking about the stock, but I know you're not a stock analyst, but I'm just wondering sort of like, is it just the direction of travel? Like at least Tesla's doing stuff. People still like the cars, therefore we still love Tesla.
I think August 8th, if what they reveal with their robotaxi, I think that's going to be a milestone moment for Tesla. And I think that's going to really kind of set the direction, the tone for what Wall Street sees Tesla as, for sure. But as you've probably seen, and you've probably discussed on your show, there's a lot of challenges with the autonomy and whether it's regulation, safety. And so I think it's going to be very interesting to see what's unveiled in August from Tesla.
Yeah, absolutely. Well, it feels like time is running out for Tesla when it comes to wowing consumers and maybe investors to some extent, which is why Elon Musk keeps talking about robotaxis. Stephanie, of all the different auto brands out there, which is likely to post the biggest gains? Which is likely to gain the most traction out of the ones that are reporting tomorrow?
Oh, good question.
I've been watching Hyundai and Kia. I think Hyundai has really been making a lot of inroads into the EV market. So I think we're going to see a lot of growth from them. You also have Ford continues to, increase their market share as well. I'm also interested to see Chevy, the Blazer and the Equinox came out. They had a slow start, right? They had some software issues, but I think as we get closer to the end of the year, I think they're going to start to pick up sales. So I'm going to be definitely watching them for sure.
All right, Stephanie, we really appreciate it. Thank you so much. Stephanie Valdez Streaty, Director of Industry Insights at Cox Automotive. I have to say, Scarlett, though, when I get an Uber that has a Tesla, I'm like, man, this is cool. What also is so great is because the battery just takes up
a different kind of space than a regular internal combustion engine. There's just so much space in this vehicle.
But I'm confused as to how to get in and out. I don't know where the door handle is.
But yeah, okay. But once you get through the first 3 times of being like, how do you open the door? Then you can get it and you're good to go. And then you're like the cool kid that you're like, boom.
Okay, yeah, I haven't gotten to that point yet.
Boom. Okay, still ahead. What investors need to watch for tomorrow. This is Bloomberg. All right, let's look ahead at what we're watching for tomorrow. Coming up, you get Eurozone CPI, 5 a.m. in New York time, plus May unemployment. But CPI is so interesting because what we're seeing is the core stays sticky because of wages and services, but the overall CPI continues to come down.
Yeah, I'm looking at a 2.8% estimate for core CPI year over year versus the headline number of 2.5%. And unemployment, by the way, is slated to fall to stay unchanged at 6.4%.
And this really sets up Sintra, Portugal, which is like the Jackson Hole, Wyoming, but over in Europe at 8:30 a.m. Eastern time. You got Fed Chair Jay Powell, ECB President Christine Lagarde, and Bank of England Governor Andrew Bailey, and Brazil Central Bank Governor as well.
Would you prefer Sintra, Portugal, or would you prefer Jackson Hole, Wyoming?
I mean, I have a cowboy hat, so there is that. And then here in the U.S., you get JOLTS coming up at 9:30 a.m. Eastern. Definitely do not miss that. Sets us up for Jobs Friday. That wraps it up for me and Scarlett. Have a happy Monday. We'll see you tomorrow. This is Bloomberg.